Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me remotely is Phil Mackintosh. He's our chief economist at Nasdaq to review how policymakers and investors are starting to model out the global economic impact of the coronavirus as the race is on to mitigate the spread of the virus and provide stability to the markets, consumers, and the economy. Phil, good morning. Thanks for joining us. And U.S. jobless claims hit a record even bigger than what we saw in the Great Recession and even the all-time low mark in October 1982. What are your thoughts around that? Do you think we can possibly stay on budget? Has the market priced this in and revisions to GDP?
Well, I don't think that the number is actually that much of a surprise. And there's been lots of data and lots of discussion about the fact that lots of businesses, when we're working from home or in stay-at-home mode, have basically not been able to operate. We know that almost every single restaurant in most of New York State and lots of America have shut down. There's been data showing the consumer discretionary spending has declined close to 100%. I mean, we aren't that surprised by the number. And in fact, a lot of the forecasts were actually sort of between the 2 and 4 million claims mark. It's 4 times bigger than we've ever seen before, but it's in line with what people were expecting, just because of the nature of what we're doing now, where we're telling people, go home, don't work for a month, and hopefully when we come back, it's all going to be okay again.
Yeah, let's take a look at some COVID-19 data that's out there with our next 2 charts. It looks as if global new cases have increased, and it seems as if the media is focusing on what's happening in Tokyo.
Yeah, there seems to be a lot of press about the spike in the Tokyo cases, which really is just not material in the overall scheme of things. But the fact that the cases are still increasing globally is not a great sign. I mean, we have been using social distancing now for, it feels like, a week or 2. And in a lot of countries, the clampdowns have become pretty strict in the last few days. And we haven't really seen those caseloads slow down and stop yet. But yeah, that's obviously one of the key things in terms of how fast we'll get through this and how bad it will be and what sort of strain it will be on the hospital system, is how long does it take until we do start to slow the growth before we actually start to have more people healed and less people actually still sick with COVID-19.
All right, we always like to wrap on a positive note. It seems as if Westchester in New York State, cases are either stabilized or declining with the social distancing in place. We're seeing that a little bit in Italy as well. But I want to finish off on market data in our final chart here. Tell us what you're seeing.
Yeah, so we've been tracking, obviously we've had 4 market-wide circuit breakers in the last couple of weeks, which are unusual when the market has sold off so aggressively that it's stopped for a bit. But there's also single stock circuit breakers that exist so that single tickers don't sell off too aggressively or rally too aggressively. And we've been keeping track of them just to see how well the market is trading. And obviously with all the volatility, we've seen a lot more single stock circuit breakers as well. When the market-wide circuit breakers have stopped all stocks trading, what we've actually seen is a lot of the times the single stocks have then gapped back up. So that's a good thing. The market-wide circuit breakers stop the market selling off too much. The market actually bounced back, and a lot of stocks bounced back even more than the guardrails that are set up for single stocks allowed. What happens then is markets just reset at new levels and trade on, but it stops really bad prints and really bad trades from happening. You can definitely see in this chart that there are a sort of a general increase in the single stock circuit breakers day after day after day if we exclude those huge volatility market-wide circuit breaker days. But in a way, that's probably a good thing because it's showing that we're starting to see some stock selection, even though we're not seeing market-wide sell-offs. So we've seen the last couple of days some movements in airline stocks, some pretty aggressive trading of them, just because of the way that the government backstops look like they're going to help airline stocks get through this crisis, even though most of their planes are grounded. And that's just one example of where people are starting to pick stocks out of the sort of panic that we saw last week.
Yeah, that definitely is a great way to end on a positive note. Phil, as always, thanks so much for joining us.
You're welcome.
All right, and thank you for joining me on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.